Hey everybody, Jake here with Jake Wu Market Research. I wanted to go over a video on probably or very close to the most commonly asked question I get on Twitter in the comments section when I'm posting charts and mentioning the SR flip. So what is an SR flip? An SR flip is simply when previous support flips to resistance when you break down, or previous resistance flips to support when you break out. And that's really it. You can use it in horizontal zones. You can use it in diagonal trend zones. You can use it with anchored VWAP. You can use it with volume shelves using the volume profile. You can really use it with anything as long as previous resistance or support that price has respected flips to the opposite once a breakdown or breakout occurs. So here's a very simple example on the Qs. You had price having trouble getting through this horizontal level multiple times over about a month and a half time frame. You can see that here shown by these red arrows. Now what happened was you finally had a breakout of this area, you had a pullback, and this previous resistance zone now flips to support. And so that's why I changed this red zone to green as price started to really respect this area as a support zone. So what I did was I essentially took this wick here and then this wick here, and that's the width of my zone. So that's how I created this particular zone. You don't want to have a zone that's too big because then you have a margin of error that's too big, and you could have, especially if you're trading something that's very sensitive to, time, i.e. options or anything with leverage. You don't want to give yourself too much flexibility. So you definitely want to have a zone that makes sense and is narrow enough where it definitely shows that, okay, there is definitely a flip going on, but not narrow enough where you're going to really get times where price has a false breakdown or breakout. So I like to use this type of zone. In this case, this is from around 312.25 all the way up to around 315. Obviously, a $2.50 zone is going to be based on whatever you're looking at, right? You're not going to have a $2.50 zone on a $3 stock, or you're not going to have a $2.50 zone on a $10 stock. So, each stock has its own personality, each stock has its own price, and those zones that you create are going to be a function of that price. So in this case, you can see very simple: previous resistance flips to support. This is an SR flip. Now, if you want to look at an example using a basic diagonal zone, here's one on IWM on a weekly chart. You can see here that the trend zone starts from the COVID lows. We extend this out. You can see here that we had an area here that acted as support multiple times. We're essentially connecting this wick here. So if you're following my arrow, this wick here with this wick here. And then we're extending it out. So that's where this is extending out. And you'll see here that once again, we tested this area again. This area acted as support. And remember, a lot of the time when you are using these zones rather than just exact trend lines, you want to use essentially wicks, right? So this solid zone, this solid line here is the outer part of the zone, the bottom part of the zone, at least for support. And then this dashed line is essentially your secondary zone. So you can see here that it's literally a parallel line. So all I did was, if you guys want to kind of see it in action, all I did was I copy and pasted this. And then what I did was I added essentially that next trend line to this wick right here. So that is where this second line is coming from. I'm just using a parallel line and connecting that parallel line with this most recent wick, or the first wick that occurred. And so then I'm just double clicking here. I'm changing the width. I'm changing this to dashed since it's more of an area where price hasn't respected perfectly. That's why it's dashed. And then you can see price has respected this area multiple times. And then once we broke down, this area then acted as an area of resistance. So support back in October of 2022, December of 2022. We finally break down in March of 23. And then you can see here, not one, not two, three, four almost 5 times we tested this area and failed to get above it. So this is a great example of an SR flip on a weekly chart using diagonal zones. So you can use this on a 1-minute chart. You can use it on a 5-minute chart. The time for all of this is fractal, right? So you can draw a trend line on any time frame and it's going to act the same. So there is no restrictions on time frame. There's really no restrictions on anything. You can use this on diagonal levels. You can use this on horizontal levels. You could use this with a VWAP. So anytime price is respected an area as support and resistance, and then you get a breakout or breakdown, and then that area is proven to be support or resistance on the opposite side, that's simply an SR flip. So it's not a very hard topic to really understand. It's really just an acronym: SR, support resistance, and then the flip meaning that it becomes the opposite of what it was. So hopefully this video was helpful understanding a little bit more about SR flips, how you can draw trend zones with SR flips. And once again, remember, an SR flip does not mean that price can not go below or above what it just broke out of. So for example here, you can have an SR flip, but then if it breaks and closes below this zone, then it's invalidated. Any setup that you have in the market can be invalidated. Just because it is something right now doesn't mean it's going to stay that way. That's why you have to have important levels of invalidation. So anything can have an invalidation area, and that's why it's important to establish those so you're not just kind of chasing a dream, right? Oh, well, it was an SR flip zone. Maybe I need to make my zone bigger, or and start playing that game. Come up with a zone kind of width that you're comfortable with. Different stocks are going to have different widths based on the personality of the stock. For example, Bitcoin is going to have a much bigger zone than Apple or Google, something that isn't as volatile and doesn't have these huge wicks that occur within price action. So just remember, anytime you have a setup, it can invalidate, but you can still call it that, i.e. SR flip zone, until it invalidates. And you can keep this on the chart until that occurs. So always have an invalidation point. Remember, SR flip zones can be on horizontal levels, diagonal zones, diagonal trend line zones, moving averages, literally anything. As long as it was previous support or resistance and flips to the opposite, you have yourself an SR flip. Hopefully this video is helpful. Thanks for watching. Please like and subscribe if you enjoy these videos, and we'll see you next time.